Hello and welcome back to our stock toolbox. This tool initially was only intended to be similar to a diary where you can track all of your transactions with stocks and your reasons why you bought them and when you will sell them. But I was having a lot of fun and I upgraded it quite significantly. The light version of this tool is quite simple. You take all of the fields that are marked like this and then you fill them out and your tool is basically done and you get most of the input that you see around here automatically. And it's quite important to be a US company for this tool. And for example, we take this stock with the ticker symbol THO, which is the stock called Tor Industries. Then you put in the price that you paid per share. Usually most brokers show it to you, but you can calculate it yourself as well. Then you put in the date at which you bought it, the first stock, then the amount of shares, and then you're basically done. And if you want the red line that you see in here, the amount of money you invested at the start, then you also need to put the data into this graph, which was also marked in slight yellow, if you can see it. And depending on when you bought your first stocks, this timeline changes, and then you just adjust the amount of money you invested at the specific dates. Approximately, it's not that important, just for a general trend line. Then you have the basic version where you also see the red line, and then you see the most important parts. So this was basically the video for the light version where you just put in the 4 to 5 fields depending on what's important to you. The rest is automatic. And if you're more into stocks, first of all we have the big table. It's called the return on investment, the amount of money you currently made over your investing period per annum, and I'm currently at -6%. And the next part is the average compounded annual growth rate, where all of your stocks are weighted at your current portfolio value, and then their time-based annual growth rate is averaged down and weighted. So my return on investment would be like 9%, but it comes more from the stocks I bought recently during the pandemic, and they outperform quite significantly. For people that are interested in dividends, you get the portfolio yield on cost, which is the amount of dividends you receive per share divided by the price you paid per share. If you would rebalance your account where you have specific values like 10 different stocks, each is weighted at 10%. If you rebalance your portfolio, there are studies that show you bring about approximately 1% more return per annum in comparison if you wouldn't rebalance it. Then this is the amount of profit or loss in my case, plus the dividends I had, a complete portfolio value currently, additionally with my dividends, then just the regular portfolio value and how much I pay for my portfolio, which isn't done correctly for me because of the currency exchange rates. They swapped a little bit since I started investing, I guess, and I invest around 11.6k or 3k for people that only want to invest in specific market segments. For example, large cap, small cap, medium cap, nano cap, micro cap. The different caps are also part of my first video, or you can also look it up online at a different source. Depending on my weighting, the stocks I own are on average worth around 300 million at their market capitalization. And if I would have an equally balanced portfolio, I would have invested around 1,000 in each stock segment that I own. Oh, right, and before I forget it, you need to put in your date when you bought the stocks in the American way, where you put the month first, then the date, and then the year, written like this, and it was the 1st of July 2019 when I bought these shares. I go through all of the different functions. The first one is the price, which is a Google Finance function. It pulls out the recent price with 20 minutes delay. Then you have your current value, which is the price times the amount of shares you have, then how much weighting it is in total of your complete portfolio value, then how much you paid for the shares and how much profit you made with this. Then it's really fun to know how long you are invested into a stock already. Then a simple return, if I bought a stock for $4 on average and the stock is currently worth $8, I make around 100% return. Because I own the stock longer than 365 days, my simple return is higher than my time-based return. And depending on the weighting, this is the time-based return on investment. And this is how much impact this stock makes time-based and weighted on my total performance. Then we have price earnings. If that's important to you, which it should be, then you could put in your target balance. If I want this stock to be 20% of my total portfolio value, it adjusts this number, but this number is also out of balance now, and I have to cut off like 10% of other stocks. So I go 7, and I get about 100.45%. And then you see all the values and then the new average share price. Oops, you don't. And if you've overwritten the formulas in there, you can copy it from the top, but then you have to adjust it for where it starts. Or you just take it from somewhere else where it's still working and drag it back up. And then you should see that the balance is restored. If you would rebalance your stocks, this would be a new share price. You might notice that this is actually the price I paid for because the stock is overbalanced. And if you sell shares, the new share price doesn't change. But if you have stocks that are at a different price than what you paid for, then you see that the price would actually adapt depending on how many shares you own and how many you need to buy to reach your target balance if you want to rebalance. And here you can see the amount of shares you would have after rebalancing and the new weighting, but you can ignore this. And then you can see the yield on cost depending on the weighting. And if the stocks pay dividends continuously, this would be your yield on cost. And some of the stocks might already have stopped to pay dividends, and you have to look into that. This would be the dividend yield after you rebalance. This is the regular dividend. Here you can see a market cap, and here you can see stocks that pay dividend and how long ago it was since they paid their last dividend. Some stocks pay bonus payments and only once a year, and it may look wrong in the formula that way. The usual procedure with dividends is they are paid 4 times a year, so I take 365 days and divide them by 4. Then I get 91.25 days in between different dividend payments. This stock didn't pay for 150 days, 130 days, 95 days, and for example GameStop, they didn't pay for about 500 days. Here's the difference to their average, and then you can see if it's a usual stop. For example, if they pay yearly, they pay like once every 365 days, and if that's the average, then it shouldn't be a huge difference to the average from when they last paid it. This is just a pull from another sheet where you can track if they paid dividends or if they formally had an error, but usually it can be hidden. And what I find quite interesting as well is the days until the next earnings date. And I intended to make a play a few weeks ago where I sell a stock once it reaches the earnings date or closer to earnings date, because I thought the stock would keep going upwards until then. But I messed up the dates and I thought it was like July, but the earnings date already was in June and I just messed it up mentally. So I implemented this formula where I can see where my next play will come up, which could be in 10 days, for example, if I want to make a play there. The next earnings date, if you want to check a date like this. And these 2 rows were intended to be the initial main part of the formula, but it kept evolving and we ended up with this sheet. And I'm quite happy with it. And first of all, the reason why you bought a stock. I'm not sure about all of them and I didn't want to pull out my notes, but those were about the reasons why I bought different stocks and when I will sell them or I intend to sell them. You can read through them, but these fields are just filled out approximately because I don't want to influence you too much with my ideas and I want you to make your own educated assumptions. And the next step would be your target price. You think the stock might be worth this much and if the stock is at a specific price, which you consider a fair value, considering margin of safety, if you know what this is. In this formula, I used around 40% margin of safety. If this price is reached, you consider buying it, but all of these numbers are fictional right now. You have to make your own assumptions. Then we have currency, which is Google Finance function. And we have a currency function which isn't really implemented yet. And if you assume that you own a stock that is listed for Hong Kong dollar, then this sheet will automatically change to Hong Kong dollar. And then the currency will also adapt, and it's not implemented yet, but then you would need to change all of the numbers that are listed for Hong Kong dollar by this number, so you get back to US dollar, so you can compare stocks more easily with other stocks that aren't listed at the same exchange. And here would be a Yahoo Finance link where you can check up the data manually. It isn't working with my sheet. If you're interested in formulas, you can look up this one. It matches with a variance function. But I removed it, and I think it's in another tool still. If you want to know more about this, it matches different outputs and searches for specific words, and then matches this, so I don't have to adapt all the currencies. This is a tool for the currency exchange rates. It's not the next logical step, but it's a good time to check it now. If you want to see a graph about the currency exchange rates, you remove this dot that's at the start, and then this sheet loads, and you get how the price changed from the first time you bought a stock to now. If you look at the currency exchange rate, the US dollar to euro downgraded a bit since I first started buying stocks. And I think that's the difference for about 400 euro in invested capital that disappeared for now. If you add a dot in there or a space, then you don't have to load this one, and it usually works faster in total. And in this sheet, you can see all of the different currencies that were relevant for me in the past. And they are automated in the first function as well. If you go back to the graph, if you want an explanation, this is a sum function. If you own a stock, this 0 turns into a 1, as we can see down here. And then it multiplies the shares that you own times the price at the close times 1. So it's positive. And if you didn't own any shares at the time, then it's multiplied times 0. And so it gets 0. And there's the sum of all of the shares that you own at a specific time. And you get a table. It goes for about 1,000 days, I guess. And if you invested for longer than this, then you can add more columns and drag down the formulas from there. And then you drag it down. And once it's dragged down, take it like this. And once you have the formula copied like this, you go horizontally, and then it updates as well. And in this row, it usually takes the value from the one before, so you get an accumulated amount of money invested. Some dates are input by me. For example, around here in July 2019, I invested another 1K, and then you have to change this field, because if you only have like 1K at the time there, then you have a huge difference in there, and all the future values are still this one, and you have to adapt in there. So ideally, if you take the sheet, you just put in how much money you invested at the start and take the cell M1 and put it to the end of the sheet. So you don't have to overwrite all of my values. You can just adapt whenever you bought new shares and transferred money. And this graph is really valuable for retrospective review. For example, if you go into my sheet, the start isn't correctly because one of the shares I own, which is called Taylor Brands, I bought them at 3 different times. So my start price is actually, I just invested 1K into them at the start, and my average price now is 5.6 US dollars. But I started investing when they were worth like 13 US dollars, and it just my new average price, and it messes up the graph at the start, but at the end it gets more and more reliable. And about this graph, it was after the crash at the end of March, where I invested from 8K to 11.3 thousand euro. In February and the beginning of March, I was occupied with exams, and I didn't even notice that I was up to like 15k almost, or 14.4, and I knew it was up like 20%. This price is maybe explained because of the exchange rate at the time as well. I just noticed the money put in should also be listed in the same exchange rate that your main portfolio is, for example US dollars. I just noticed my mistake, but I won't fix it yet. My numbers are in euro right there, and the blue graph here is actually in US dollars, so this might explain some of the difference that I didn't notice at the time. Next is dividends received so far. It's also automated, where you get a dividend payment depending on the period. It doesn't necessarily has to be once a quarter. It can be additional payments, or for example, stock called DX pays once a month, and I'm invested since 8 months, and that's my sum of all of the payments I received so far times my shares. Then there's a new sum down here of all my dividends paid so far. And for me, my main residency is in Germany, and if I receive dividends from the US, there's, I think, a 10% tax withhold, and I just have to pay 50% to my local government. And in Germany, there exists another tax if you're a Christian, which is church tax, and it's 7% of all the dividends tax that you paid already. And then there are flat costs. For example, different brokers have fees sometimes, mostly non-US ones, and then you just can add them there. Then you have your profit after taxes, and that loops into your total portfolio value plus dividends. And if you watched my other video before and were able to process it all, then you know this sheet. And this tool is also automated, and it's mainly to get data about dividend stocks, and from the source Dividata. You can just look through it, and if you want, I can explain in another video, but it's quite long and a bit confusing, but the formulas should be available, and I hope you understand them as I make a video. Mistakes and rules. This was also one of the core functions of the sheet at the start, and most of my rule sets come from a specific book, Contrarian Investing, from Anthony M. Galea and William Petalon III, and I made most of my investing choices at the beginning based on this, and some of them turned out quite well. And you might notice that one of the piggies has golden tan and is filled to the brim with money, just like me. And different rules. The company should have around 2 out of 5 of the criteria, and the stocks that failed that I bought had more than those 2. Yeah, pretty much all of them. For example, price to earnings, how much a company earns compared to the price, then how much free cash flow the stock generates per year, or on average, compared to the price, then price to book, all of the balance sheet basically, and the price, then how much sales they generate compared to the price, how much the earnings grow per annum compared to the price, and share price usually has to be above $5. You can just read through all of that if you're interested, and then you just add all of your ones down there, or you just delete mine, which is totally fine for me. This is my old sheet about intro, data, and sources, and you can just go through there. If you want to support me and you're interested in some of the books I mentioned in there or in prior videos, you can all find them in this one. You can join Discord, talk me up there. I'm usually every day on Discord. The email list will come once there's demand for it. And here are the sources that might explain some of the stuff that I mentioned but didn't explain in full disclosure. All of the stocks in the first sheet are stocks that I do own at specific prices and shares. And all of the data is just for information, education, and entertainment. And I don't want to influence you to sell or buy any of the shares that I showed or mentioned in this video. And for this sheet, it's really important not to delete these columns A to Z, because then it would break the whole formula, as you can see now. And the sheet is currently limited to 40 stocks, but you can add more. Later on, I will put out a light version, which should load significantly quicker. I can remove unnecessary parts, or I'll let you remove them, depending on your recommendations. Thank you so much for listening. Please let me know if you enjoyed the tool and if there are any errors or significant improvements that you would like to see. I hope you will be the next time as well. and thanks for your continued support. Until next time. Bye bye.